Hello and welcome to another ProElliottWave.com video analysis for November 8, 2013. This will serve as the video analysis for the upcoming week. Please note that our newsletter section has been updated along with the charts for the currencies and the US market. And the weekly newsletter update is for the week of the 10th to the 16th. Let's get started with our some of the legal issues. This site and services, along with this video analysis, are for educational purposes only. Investing in securities, forex, and futures markets carries a high degree of risk, and you can lose all of your investment money. All opinions expressed and data provided herein are subject to change without notice. The services offered by us may not be suitable for all investors. The material is intended to provide and the material is not intended to provide and should not be construed as providing individual financial investment, tax, legal, or accounting advice. You should consult your professional advisor prior to acting on the basis of the information here. If you have any questions, please contact us at proelliottwave.com. Let's start this week with going over our newsletter. As you would see, there are four major charts that we have in there, and of the currencies which we're going to be covering in this video, the most interesting one, I believe, is the euro yen. And we'll go further into that detail, but with the events happening this week and with the rate cards in the eurozone, uh, everything has been exaggerated, and as you saw, there were extreme shifts in sentiments, and you saw, as we explained in the previous video, whenever you have all these events happening and you have the Fed cutting rates for the Eurozone or the US markets, you'll see very exaggerated Elliott wave counts. And that is very apparent in the Euro yen. First, let's before we get started with going into details, let's look at some of the main events happening next week. I believe the key ones are going to be with Thursday being the unemployment claims and some Fed news, both out of the Bank of Europe and also with the US markets. So keep your mind, again, those are the times that are very critical and action is very fast, so be extremely cautious trading during those events. Okay, let's get started right away with our euro yen. As you remember from our previous analysis and videos, we are in an ending diagonal pattern that started close to the June of this year. We've completed the 1 to the 2 to the 3 to the 4, and we are working on the 5. As I explained in the last video, we have to be very cautious to see whether this pattern that happened here, was this the end of our diagonal? Which I don't believe so, because there is a law of equality between the wave counts. And if you're measuring days and times between these waves, there has to be some sort of correlation. As you can tell, wave 1 took so many days, wave 2 to the 3 to the 4, and I don't believe wave 5 would be that short. However, that doesn't mean anything. You have to wait and see what kind of pattern and what kind of momentum you see out of investors. I believe that since the 131, 146 held and it was not broken, uh, in that situation, we formed an A to the B to the C of the bigger A, B, C of this fifth wave, completing somewhere up here. Let's go in further detail. All of this action got extremely accelerated with the events of the rates cutting, the Fed's cutting rates in the Eurozone, which was a surprise cut that a lot of investors didn't anticipate. And once we pass this line, which actually let me zoom out to see it more clearly, this is the line joining the beginning of our wave formation for the ending diagonal to wave 2, passing through the 4 and continuing on. This is an extremely important line as investors were and traders were looking to find a good place to buy it from this point. And I thought, I actually got a little bit hurt trading myself in this position because I jumped into it too early. As I've always said, you should wait for confirmation. And what happened is that once that line was broken, there were a lot of stops that were hit. So having said that, you still have this formation intact as it has not been penetrated through this point of 131, 146.14, basically 131.14. And we bounce off the lows. Let's dive into it for more detail to see how this was formed. Let me expand this a little bit. Okay, so off of that high, we've done an A, B, C, and the C is also completed with a 5-wave impulse wave. And off these lows, I believe what we're forming is a leading diagonal of the 5th wave at this point, with a 1, 2, 3, 4, and a 5 coming up to here. Somewhere around here coming back down. And this is where our trend line comes back into action. We are testing it. If we penetrate through it, we should find some buying momentum. If we don't, these lows are going to be tested again, and we'll see if we go through them or not. Once we go through these lows of 131, 146, our previous alternative count, which set this right here at the high of 135.44 to be the end of our diagonal and start of the bearish correction, which will last us, I believe, for a good 2 to 3 months at least. If it's accelerated, and if it's not accelerated, even more. So we would have to wait and see. On the other hand, if we get this as to be the bounce, and then we would come back and test this, I believe we're going to form an impulse wave to form the A of the B of the C of this last leg of this ending diagonal pattern. Again, early next week we should see signs of this. I believe Sunday we'll start coming back and testing some of this, and by Monday I think we're going to get it to this area. We'll wait and see, and how we'll have further updates for you early next week to see how the counts are progressing. Now moving on to the euro, what you see is we did call this top last 2 weeks ago, the A of the B of this final C formation, which I believe the best way to go about it is this Alt D from an A, B, C, D coming back down to an E formation that is a multi-year from going back all the way to 2009. So what we've done in the past, let's zoom in a little bit. In the recent past, you'll see that we formed our high here, previous high around January of this year, came back, did the ABC pattern to our B, and right now I believe we're working on the C, where the most recent high of 1.3832 was just the A of this ending pattern of this ABC to the upside. So if I highlight this, you'll see what I'm talking about. And then right now we're working on the A, and then we'll go back up, test the B. I believe this Fed rate cut from the Eurozone obviously accelerated everything and confirmed, and especially once we pass through this level of 1.34693, everything got even more accelerated because any bullish count that anybody would have had is no longer valid, and we're going down to the down. We're working towards the downside. If we zoom in and we'll see where we are at this point, um, you'll see that. Hold on, let me. Okay, that makes sense. I believe we're working on the fifth wave of this pattern of the A, and we have a 1, 2. I believe we're working on the 4 here. We made a 3. This 3 could be more elongated. We would have to wait and see. These counts, especially once you get into the hourly and 15 minutes, these are our best guesstimates at this point. You really have to investigate it further by waiting to see the action and how it progresses. But at this point, this is the count that we're carrying. I believe we're going to come back up somewhere to this point. And if I get a ratio analysis of the 4 uh, versus the 3, um, you'll see should end. We tested the 61.8 Fibonacci. I believe somewhere around the 78 is where we're going to end up and start moving down again. So by Sunday, I believe we're going to perhaps move up a little bit and then start moving further down. Okay, moving on to the US Japanese yen. You'll see that we are in the midst of the completing or in the middle of our fourth wave of this bullish run from the start or at the end of this bearish cycle, which ended around October 2011, and we started this bullish run. We're definitely in the fourth wave formation now. Whether this is an A, B, C, D, E formation, and are we going to go straight through this towards our fourth? I mean, towards our fifth, or as I have it out here, whether this is an A, B, C pattern, we'll have to wait and see how the action evolves from here. Moving on to the daily, zoom in into that action here. What you see is, let me move it here so it expands. I believe we formed an A here, and we're working on the B because once if you go with the alternative count as A, B, C, D, E, I believe this action would have been a lot more bullish. You would have seen a lot more investors jumping in and taking this all the way up. However, due to current events and world economies and so forth, that's how the action has been evolving. And I believe we're forming an A, B, C, D, E to form the B wave of this and then move further down. So zooming into the 4-hourly to see this better. This is all what happened in the last couple of days with the Eurozone and the dollar index, the strengthening and the weakening of these currency pairs is very apparent during these exaggerated times where you have major Fed action. But I believe we're working on the E wave, and this is the A. I'm sorry, I'm going to pause this video and I'll continue in the next part 2 of this video. I'm reaching my limit with my video size.